Alright traders, we're looking at trailing range structure and we're going to go through the chart using price action rules. Now the first thing I want to do, because I know that the structure is trailing range, is I want to make sure I identify the support and the resistance. Because according to range rules, the prices will oscillate in between these important key levels, and these key levels will also help me to identify the breakout area, because according to range rules, most breakouts will fail. Now, even when the structure is trailing range, we can see a lot of price swings up and down, and the 21 bar exponential moving average is for the most part flat. Even in ranges, there are small trends within. These candles are never without a pattern, and once the prices are working to the upside inside the channel, you want to look for high probability setups to go long, and once the prices are working lower, you want to look for high probability setups to sell. Now, these channels, after there's a break, we expect move to a new extreme, and after that we expect correction or reversal. Now if the range is tight, we're most likely going to get reversal, just like you see here: break new high, reversal down, break new low. So even though the structure is right now looking quite bearish, the short and bias I mean, you're not really thinking that the price is going to continue working lower. You're thinking that the market's going to bounce higher because you're at the support of the trailing range. A lot of buyers will buy here, and the downtrend played out with the break new extreme. So let's see what's going to happen. Okay, prices are already staying above the EMA, so this is a good clue that we may reverse, but we have congestion, a lot of dojis, so I'm just going to be patient. I'm going to see what the market is going to do. The reversal pattern, the failed second entry short, is not really that great. Okay, inside bar, but if you're thinking bullish, your idea is correct, and notice what's happening. Okay, we are very close to reaching the resistance, which we're most likely going to reach it because we're coming off the bottom and we're staying above EMA. And remember, just as I mentioned at the very beginning, these candles, even in ranges, they are never without a channel. So since the move is quite significant, I want to find a significantly important channel, and this channel is containing prices nicely. And right now, since I expect for prices to reach the resistance, I'm thinking bullish. I cannot just buy randomly at these highs. I want to see a nice two-legged pullback, second entry long. Because when the downtrend is working lower, I want to see second entry short at the key entry point to expect for market to continue working lower as a high probability setup. And once the prices are working higher, I want to see two-legged pullback. You can see we only have first entries. So every single time I see a new high, I'm going to reset the count, new high, first entry long, count reset, new high, first entry long, count reset, new high, first entry long, and I have to reset the count. And unfortunately, we never really got the second entry long, so there's really no way for me to capitalize on this momentum, and prices are right now breaking the resistance. As we all know, most breakouts will fail, so I'm not really expecting for market to continue higher for too long. I expect at least some pullback. Now there may be a breakout pullback, but most breakouts will fail, at least temporarily. Now does this mean that I can sell? I cannot fade the breakout just yet. Why? Well, because the uptrend is still in play. This still looks like one seamless leg working higher. The uptrend is still in play, and you never know if there's going to be a tiny little break and then move to a new extreme, and only then the breakout will fail. So you cannot gamble, you cannot guess. This uptrend is in play, many conflicting patterns. Just wait for what the price action is going to offer you, and we can see it. We are continuing breaking below EMA. By the way, this was where the news were announced, so I got to be careful. And remember, once again, I'm redrawing the channel again, because there's a reason to price movement, and these candles are always following a channel. We have a new low, first entry short, second entry short. Okay, so at this point we have confirmed downtrend, and we have the second entry short, the setup we are generally looking for. But at the same time, the last uptrend didn't really create new high, and we have conflicting variables. And at this point, I need to decide if I'm going to expect new high and I'm going to expect new low. Well, generally, if the trend range is this healthy and this tight right from the very beginning of the session, the range rule will prevail. And for this reason, once I drew this downtrend, I was expecting for prices to create new extreme. I was thinking more bearish. So this right here is a second entry short, decent high probability setup to take. Second entry short, right at the EMA. You want to make sure you have enough room to scalp before these lows. And now we have a lower high confirmation setup. This lower high is confirming the second entry short, and this makes it a high probability setup. EMA keeps rejecting again. Now I had a little bit better bar, but if you're a bar, and I noticed a lot of traders had worse bar. If your bar has a bullish body, you want to be patient because this is already quite stacked. You can see it's a little bit sideways. So this is definitely more aggressive. I'm going to mark it more aggressive. But this is still lower high, confirming the second entry short. So for this reason, I actually took it. I use my limit order 2 ticks back because once I see congestion, I like to sneak in a little bit more. It's a bit sideways. And it worked for 8 ticks, fortunately. But next time you may not get so lucky. So once it's a little bit stacked, you either want to skip or use deep limit order and make sure you have enough room to get out before these lows. Because this is a slow market to start the session with. Okay, and prices are strong and reversing. Okay, so what I'm going to do, because sellers are considering this as a break new low, after we pushed so strong above EMA and we retraced this much of this downtrend, basically the entire down move was retraced. What does it mean? Well, this uptrend right now is most likely going to create new extreme because there is a midline of this trend range, which is right now showing signs of support. And after such a massive push above EMA and such a retracement of this downtrend, you have to think about, okay, the bulls probably want to truly see the new high of this uptrend. We have high low, a little bit of a breakout pullback, but it's not really confirming much. Not a bad setup, and by the time I get a failed second entry short, notice how bad it formed bearish bar, new low, first entry short, second entry short failure, and new high, second entry long. So 2 high probability setups in one. By the time you have a bullish bar, it's too big. You'd have to enter all this high up. So unfortunately, it didn't offer a good bar. Had this bar been bullish, we would have had 2 high probability setups in one. You can't really go long, and we have a great move to new extreme, which at this point, I'm pausing my long setups. And I'm looking for failed second entry long. But notice what I can see, we are already pushing all the way down here. And this is a little bit concerning if you want to sell failed second entry long because we have yet to get a lower high. Generally, once you are thinking about failed second entry long, you want to catch it because remember, this is a still trend range and you're expecting that this breakout is going to fail, and indeed it is failing. You'd like to see new high, kind of like a first entry long, pullback, second entry long, somewhere around here, and then push lower. The fact that we have pushed so far down with our lower high is quite concerning. So by the time we get lower high, it's so far from EMA, you definitely can't take it. Second entry short, too far from EMA, horrible bar. And now notice the congestion. We have 10 bars stacked right next to each other. Very similar to this, but this was a little bit better. You at least had room to get out. You have a little gap. Here we have no gap. And we can see there's some small support forming. So I definitely don't want to sell. It's too low, too congested, move to an extreme, but you can see there are still trends even within this trend range. So there's a reason to price movement. You're drawing your channels particularly tight in trend ranges because when the trend range is this tight, you're most likely going to get instant pivot. So you're not looking for any super wide channel like this or like this. Just follow the tight channels. You can always widen, but tight channels are safer in these tight ranges. And notice we have big reversal up, and astute traders can already start to see some similarities in price action. This move looks very similar to what happened here. Spike down, congestion move to a new low, spike down, congestion move to a new low, and we have massive spike up, massive spike up. And notice we have high low above the EMA, big bullish bar. At this point, the range highs have moved quite up, so I move the resistance a little bit higher, and this high low is not really confirming much, but since it is a repeat pattern of exact same type of scenario that happened right here, we can go long here. Now the bar is big, so you want to use your limit order, and you most likely would not have been filled. But even though this high low is mainly contextual, because it is such a clear repeat pattern of what happened here, once something works once in price action, the repeat patterns definitely are a legit way how price action works, so you can definitely capitalize on this market created new extreme. Now we have a break new high for the uptrend, which is also a reason why you want to take high low, because it means new high. You have to ask yourself, because you're facing the decision, can I sell because most breakouts will fail? I really cannot. Why? Well, notice what's happening. We have bullish bias in this market. How do I know this is a bullish bias? Because we have bullish imbalance. If this trend range is healthy, like as it was in the very beginning, the prices would go all the way down to the main support. but the main support was never tested. Only the midline, which means there's a lot of empty room at the bottom of the string range, which means the bears are really struggling to create significant move. The midline is holding, and at this point it looks like there's a small trend range being established at the top of the main one. So we have bullish imbalance. So for this reason, I don't want to be selling series of higher highs and high lows, but at the same time I cannot go long at the very top of the trend range. So this is the type of area where you cannot really go long and you cannot really sell at the same time. And yes, there are these types of areas. Sometimes traders think, okay, I cannot really go long, that means I have to sell. Well, not really. This is the type of area where it's too bullish for me to sell and it is too range-like for me to go long. So I just need more information. Okay, we're working hard, but massive push down. We have a lower high, but it's not confirming much. It's not confirming a clear failed breakout. We have many pushes higher. And now we have new high, first entry long, pull back, second entry long. Now when I was watching this, I was thinking about possible failed second entry long. Then I saw this massive rejection and it tricked me into thinking, okay, we may have one more push up. So I stopped looking to sell. But notice, if you're still thinking bearish, what a nice setup you have, because you have failed second entry long and even counting from lows. First entry short, pull back, second entry short. So we have two high probability setups in one, and that always means the setup is very strong and it has higher chance of success. The more variables you have to confirm your analysis, which means more setups, more key entry points, the bias, that means the setup has better chance of succeeding. So we have failed second entry long and a second entry short. It is a range-like pattern. It is a great high probability setup. Unfortunately, I don't really know why I got suckered into thinking we may go long. I didn't take this trade because it's definitely too early. I would need to see some failed second entry short. But I was supposed to be thinking bearish because this was such a great push down. It's a shame that we didn't really continue pushing way below the EMA. But this is a great setup to high probability setup, and it's still looking like a trend range, and the market bottom eventually fell off. So I'm going to redraw the downtrend. Okay, we have a downtrend in play. We have only first entry short, so I cannot really sell. We have a new low. So once again, I see a range. I see moves inside the trend range. So what does it mean? I need to find my channel. There's always a channel present. Channel working lower. We have a new low. First entry short, second entry short. Can I sell the second entry short? I cannot, because it is so far away from EMA. There's a gap. So I'm thinking possible double trap, but we're breaking above EMA, and this is not double trap because it's not closing below the EMA. So I'm waiting. Okay, I see massive push down. So I'm looking for a lower high. Can we get lower high? Big push up again. No lower high. There's no break above this bull bar. Nothing is really forming, and we're breaking higher, and we are breaking higher this much. Okay, so at this point, obviously, the prices are more bullish, and once the range is tight and slow, you cannot get married to one particular idea. You have to be able to adapt quickly, because this is not a strong trend where you expect for trend to continue. This is a very tight trend range. So once you see already such a deep retracement, you have to adapt. And once I came back and reanalyzed it, it looks like there's probably a little break and a new extreme of the downturn. So you can see such a tiny difference sometimes can make a difference. Now, most of the times it doesn't matter. Your goal is just to be close. You don't have to be perfect. But in this particular example, the tiny difference, unfortunately, mattered. But there's really no way for you to get trapped looking to sell anyway, because this is too far from EMA. Now you're above and everything is above. So this is really no trade zone. At first, I'm drawing my uptrend like this, but I can see consistent push up. And this is not how overshoot reacts. Overshoot is supposed to quickly reverse, at least break the channel. This means that the trend is steeper, and I'm going to start my channel a little bit higher from this point right here. Okay, we're continuing a little bit higher. We still have a little overshoot, but this is quite significant uptrend. Either way, I'm going to redraw the downtrend. And by the way, we can see the uptrend working higher. You would still be counting for two-legged pullback second entry long at the EMA, which never formed. We're just observing the price action work higher. We have a new high, first entry long. This downtrend is so strong. The uptrend still needs to get new extreme, so I'm still thinking about possible second entry long. But we don't have a second entry long. And now we have a lot of bar stack right next to each other. Okay, I have a second entry long here. But is this a good area for me to take a second entry long? It is not. Because we have congestion. And this like was so significant that you never know if there's going to be a attempt for new extreme, even possible overshoot. We may get second leg down. So we have congestion, downtrend may get new extreme. Overall range pattern, I cannot go long just yet. Okay, this is not a strong uptrend. This is still overall range, congestion. This was a very strong leg down. You can see how steep it was, how long it was. So and there is no bullish pullback in between. So you may have second leg down, so I'm going to be patient. I was thinking we may go higher about some high-low breakout pullback, but it never formed. Now we form new extreme, but we have inside bar back in the congestion, two sideways. I can definitely take inside bar. I'm just going to be waiting. Now I was thinking about second entry long, new high, kind of like a first entry long, pullback, second entry long, but it's never forming, and now the market keeps working lower. Okay, this is the second leg down. We're pushing above. Okay, so this looks decent for the bulls. But we're back below. We're back above and back below, above, below. You can see no trade zone. EMA exactly in the middle of the bars. This is the worst type of congestion. So I instantly need to stop trading because this is tempting to both buy and sell at the same time. And once you feel tempted to both buy and sell, you have to pause trading because you're most likely going to get trapped. You're never supposed to be so eager to go long and sell at the same time. You should always have a bias. You should always lean more towards one side. It doesn't mean that the opposite side may not prevail, but you always should have a bias that you follow. So this is complete mess. So you're going to be waiting, and it looks like the bulls will not get a new extreme because we're too long below EMA. We actually have a little breakout pullback congestion. We broke lower, came back, tested it, but the signal bar is doji and didn't even trigger below. Now this is not a bad setup. It's just a little shame that we didn't get a trigger right below it, but prices are completely reversing down and the bottom is falling off again. So I'm gonna find a channel, because remember, there's always a channel working. And notice we didn't get new extreme. Sometimes that can happen in trend ranges. Possible overshoot contributed to the reversal, and because this is overall a range pattern, it is rare, but sometimes in ranges not that uncommon that the channels may not get new extreme, especially if there is, for example, overshoot. But it doesn't mean that you're gonna start selling too quickly. So you're just following the price action. It is too congested, you cannot sell. Too congested here again. And you can see how bulls are struggling to stay above EMA. You basically cannot stay above EMA for a long time. So right now, the bias is bearish. I'm gonna redraw the short and uptrend. You have a new low, first entry short, second entry short. Now we have a second entry short. Good setup. I was getting ready to take it, but it never triggered. There was no trigger below this bearish bar. It stalled with this inside bar, so I canceled my order. I can't really enter because the setup didn't trigger. However, if you're a beginner trader or if you're just slightly more aggressive, I will mark it. Not that I recommend it, but I can definitely see a case why someone would sell even below this bar, because when context is good, you can make a case for selling on the next bar when the first bar doesn't trigger. But generally 90% of the time, and these days, I always wait for a trigger below this bar. When I was starting out, I definitely even traded more aggressive with bars like this when it doesn't trigger below the first bar. But these days, I'm just quite picky and I wait for trigger below the bar. Once there's no trigger, I generally wait. But this is not a bad stuff to take a chance. Now, also why I don't really like risking this, and I really want to see trigger below, because at this point I'm waiting for a lower high, is because there is possible overshoot. You can see how far away from EMA you are and how steep sell-off this was, big depletion. But this channel is so tight that overshoot looks too big, so I like drawing a little bit wider. There is definitely a possible case to make for overshoot. So if you have possible overshoot, you're not sure, you definitely want to see trigger below, and you don't want to be taking too aggressive setup. So lower high would be great, but it never formed. No trigger above this bullish bar, no lower high. It never happened. Okay, we're above EMA. However, are you thinking about buying? You're not. Remember, the downtrend still needs to get new extreme. 80 or 90% of the time, it's going to create new extreme. So we're still thinking bearish. I just need to see clear decisive push below EMA and a high probability setup. You can see we're barely breaking below EMA, too congested, cannot sell anything, even though it worked. Cannot sell anything. This is a congestion. Okay, we're breaking lower. No setup here. But notice what we have. New low, first entry short, pullback, second entry short. And we have also kind of like a new high, first entry long, pullback, second entry long failure. But this right here is a great second entry short, also a little breakout pullback of this area. And EMA keeps holding. Once, actually we broke higher here, but once here, twice here. You expect the new extreme, the trend is down, so we're still thinking bearish, we are with the direction of the trend. This is a nice second entry short, breakout pullback, and the bar is good, and the market created the new extreme for this downtrend. What does it mean? It means that we can expect correction or reversal. And at this point, it's getting too late. But you can see the market is correcting. Very slow day. That's because there was a bank holiday in a lot of states and countries outside of United States. So hopefully tomorrow will pick up. Quite choppy day. Not that clear because ranges are generally easy and predictable. But we don't really have that many static highs and lows. So it's really tough. So make sure you're drawing these tight channels because they're going to keep you on the right side of the market. And you definitely don't want to be too greedy or too aggressive. Just wait for a setup to follow the rules, because just because you feel anxious and the market is slow, remember, market doesn't care that the setups are not forming as you want. Market doesn't care that the setups are congested, that the setups take long time to develop. That doesn't mean that we can force it. So don't really jump the gun too quickly. But I hope you had a great trading day, and I'm going to talk to you next time. Good luck with your trading.